With the 2025 World Bank IMF annual meetings now behind us, several outcomes stand out. The G20's reaffirmed, if cautious, debt declaration, stronger calls for credit rating reform, and warnings from the IMF about rising domestic borrowing risks, particularly in sub-Saharan Africa. Well, to reflect on what really shifted or perhaps didn't during the meetings and revisit his case that national development banks may be one of Africa's best tools to reclaim sovereign development space and also perhaps break cycles of debt dependency. For this, I spoke to Brian Kagoro, who's the Managing Director of Programs at the Open Society Foundations. So the World Bank and the IMF meetings have just ended, and once again, Africa's debt problems were in the spotlight. Many countries are spending more on paying back loans than on health and education. So looking back, what did you take away from these meetings, and did anything really change for Africa?
Well, no, yes and no. I think what has changed is that there's a collective consciousness amongst Africans that the solutions will not come entirely from the development finance institutions. But number two, that they need to speak with one voice. I mean, if you look at the figures, they're staggering. The figures that you referred to, debt relief is at under 7%. When you look at the progress, look at recent data. If you look at external debt service, has more than doubled, reaching 2% of GDP. In some countries, it's over 60% of GDP. In many low-income countries, interest payments alone absorb 15% of revenues. So I think that the fact that Africa is speaking with one voice is good. And the Africa has placed on the table conversations about the cost of capital as well. Because part of the reason why this debt remains a problem is that we borrow at unbelievably high rates. Our risk profile is unduly elevated.
Talk to me a little bit more about the national development banks. There are not too many of them on the continent. And with the resources that we have, why is that? And who should be funding them?
Historically, we've always Ali Mazrui described the problem of the Congo 3 decades ago as a problem not of a scarcity, but a problem of excess. Africa always had raw materials and all sorts of things to export. Now, as a result, even when Africa came up with institutions, the African Monetary Fund and et cetera, Africa did not take itself seriously enough to begin investing. So this is an age-old problem that we come up with brilliant ideas and we expect the same people we want to become independent from economically to finance these ideas. What it will take is African countries committing. There are two pathways that are the national development banks require both fiscal and monetary discipline. We have to deal with the governance issues because it's possible in each of our countries to build a significant amount of reserves, a significant amount of capital. What often happens is the political exigencies, greed, and other factors end up politicizing those institutions. So if you don't cushion them from that political encroachment, and sometimes they're set up by one regime, when you have a change in an election, because of political reasons, they are undermined. This continuity of policy, this continuity of vision is important, is even as Africa navigates these democratic changes or forms of changes that happen. So the number one issue is not scarcity. The number one problem is one of discipline, of vision, and commitment. And that's the same for regional development banks. They need to be capitalized. If you look at the amounts of money that we spend on confetti, amount of money that we spend on things that the wastage only, I'm not even talking about corruption, These would go a long way in capitalizing regional development banks, but it also means ceding a bit of sovereignty. That's where we've had a problem. Our country wants sovereign poverty with respect to each other. I can understand how you assert sovereignty against external forces, but within the context of the African Union, where you now have the Africa Continental Free Trade Agreement, you now have other policies and norms that are moving you towards a continental economic zone. It is important that we understand that the speed at which we begin to cede sovereignty, to standardize, and to ensure we have the best people running these institutions has to be quicker. The second is sovereign wealth funds. Many of our countries have set up funds. The sovereign wealth funds enable us to think in an intergenerational way. At the moment, most of our countries, kids that are not yet born are already in debt, the debt crisis that we're talking about earlier. Sovereign wealth funds will enable us to address three things. Nobody has the appetite to address our social challenges. We cannot ignore our social challenges because they morph into political crisis, whether it's demonstrations, mass uprising. We cannot ignore our social crisis because they erode any notion of economic growth. So sovereign wealth funds address the social question. But number two, our growth will not entirely be financed by foreign direct investment. In fact, there's very little evidence that foreign direct investment alone can drive the sort of transformative growth that you need for countries to industrialize and to leapfrog those they depend on. So sovereign wealth funds would be key if we're disciplined enough. They'll be key to address the growth, the intergenerational question and the growth rate. But the third thing, economic stability. Half the time we're going out to look for 100 million, 200 million as stabilization money. And in countries that are so rich in natural resources, so rich in tourism potential, so rich in their capacity and ability to offer services. So it seems to me that the visions are there at the African Union level, at the SADC level. The conception of what needs to be done does exist. What's now needed is leadership that goes beyond politics. We've placed too high a premium on political leadership. We have not sufficiently placed the premium on economic and social leadership to enable us to bring the economic imperatives and the political imperatives together. Because mostly people who make it into politics are not always necessarily economically literate. And people who are in economic endeavors don't necessarily always know how to navigate the politics. We're at a moment now on the continent where politicking alone is not going to save us from political instability, from insecurity, from economic instability and penury.
All right, perhaps to really sort of bring it down to ordinary people. Kofi is watching in Accra. We have Farai in Harare, Jabu in Johannesburg, maybe Fernando in Angola. What does this past week, the annual meetings, and this whole question of debt that we've been talking about actually mean to the ordinary man in the street? Why should we be paying attention and perhaps even bringing our heads of state and governments to account?
You don't have medicines, ambulances, the roads are not fixed. The quality of education has not improved since your parents went to school. The infrastructure, the ability to keep the civil service best staffed, well staffed, has diminished significantly. Water in most of our cities has become either poor quality or scarce. Electricity, what we call power outages, are now a common thing. In part, if you look at how much it would cost to fix these problems and say, where is the money going? So you discount the corruption, you realize that our countries are paying in terms of debt servicing, sometimes just the interest alone, more than they are spending on these fundamental issues. So if citizens don't have clean drinking water, they are likely to suffer from health-related problems. Now, once our hospitals now are treating people who are not victims of disease necessarily, but who are victims of this debt alcoholism, it essentially means we will borrow money in order to show up the health services to try and deal with people who are in the health facilities in the first place, because the money we could have spent improving our water reticulation system, our sewer reticulation system, the money we could have spent on improving our housing, low to middle income housing, is being spent servicing debts. And what are these debts for? These are debts sometimes for white elephant projects. And why is it important to hold our leaders to account? We've seen in some countries, a country like Senegal discovered hidden debt. That means governments borrow. The system of accountability and transparency and accountability to democratic institutions such as parliament and other bodies is nominal. So you hear that your head of state has gone to country Y. They have signed certain agreements, billions of dollars that will not be paid by that head of state, but that will be paid by you, the taxpayer, the worker, that will be paid by your children and great-grandchildren are procured. Some of them are spent corruptly. Some of them are spent on things that don't create jobs, things that don't create new institutions, that don't repair institutions that are much needed. So what we see as a public service strike in Johannesburg, what we see as a market women strike in Accra, what we see as unhappiness in Malawi amongst the youth often translates to the wealth of the continent that is systematically, constantly, repeatedly given away because the prudence at a domestic level to govern how we borrow and what we borrow for, and from whom we borrow, by the way, because a lot of our debt now is commercial, which means we're using short-term instruments, high interest, in order to finance infrastructure, which has a low return in the short term. But Africa also needs to come together and operate as one. To give those listeners something to think about, the entire African economy, right, is smaller than the value of Tesla, right? Or is smaller than the value of, let's say, California as an economy. So sometimes we compete amongst ourselves and with each other. But if we came together, the African economy could quadruple in many respects. We would develop regional value chains, we would develop centers of excellence, we would negotiate better across the board and get better deals. So this is what it means for the ordinary person, that African unification, Pan-Africanism, regional integration is not a luxury. The nationalism that says we're exceptional because we're Zimbabwe, we're Kenya, we're Ghana, is an exceptionalism of ignorance. No island of excellence will save us from the scourge that we face in this time when there's militarization of the economy globally, there's digitalization of the economy globally, there's financialization of the economy globally. What does it mean? We can ride in an Uber, we can shop on Amazon. The money earned for most of our countries is not coming into our state coffers. It's going straight to enrich another country elsewhere. So the range of things around tax justice, debt justice, climate justice that we all have to be fighting for are broad, they are wide, and unity is the only answer.
Brian Kagoro, Managing Director of Programs at the Open Society Foundation. It's been a pleasure talking to you. Thank you so much indeed for your insights. Greatly appreciated.
Thank you for having me. Much appreciated.